So you're interested in crypto. Maybe you bought a couple of cryptos, but you're hungry for more. You want a 6-figure, maybe a 7-figure blockfolio. Even in the middle of a dismal bear market, crypto is a space overflowing with opportunities for you to make some extra, potentially easy crypto cash. So time to make some money. Let's have some fun. Welcome to Ready Set Crypto. This is your brain on blockchain. So I know, you're ready to make some money. But before you skip ahead, I first want to share some wisdom about wealth with you that's helped me. So I want you to always remember why you're doing this and never lose sight of what drives you. I want it to be the first thing you think about when you wake up and the last thing you think about when you go to sleep. This needs to motivate you through all the bad days so you can experience the good ones. Got it? Good. Motivation is the key to controlling your destiny. So let's talk about income. There are two types of income, active and passive. Active income is probably what you're used to. This is a job. Look at the two words. You are actively trading your most precious resource in your life, time, for an income. Active income. Most people think this is how you get rich, by constantly getting new and better jobs. But it may come as a surprise that it hardly ever works out that way. Your newer and better jobs end up costing you more and more of your time. And next thing you know, you're out of it. So next is passive income. It's payment not directly tied to active work. Though, don't mistake passive income with zero work. It's still work, but it's just that your income is not directly tied to the hours worked. My challenge to you is that you need to maximize the amount of passive income streams in your life. All right, two things to consider and we're done. First, millionaires have an average of 7 streams of income. And second, if you don't find a way to make money while you sleep, you'll work until you die. All right, so on to the fun stuff. Now, I categorized all of these methods into 3 tiers. Please note this is a list of all the methods of making crypto money, including the bad ones. So I'll do my best to warn you as to how I feel about them. It goes without saying that this video is for entertainment purposes and should not be construed as financial advice in any way. Also, everything mentioned in this video has no affiliation to Ready Set Crypto. I don't accept payments for anything. Everything I mention is simply to illustrate an example. All right, got it? Cool. So first up, we have the gold tier. These are the best earnings. I would classify them as morally good, and there's little risk. And first up in the gold tier is my favorite way and personally most successful way to make money with crypto. I'm not trying to brag or give myself a certification where there is none, but I consider myself an expert in crypto fundamental analysis. I've spent a lot of time digging into projects, dissecting white papers, and just getting lost in all these really cool projects. It's one of my favorite things about crypto. It's just the level of creativity and passion in some of these projects. And yes, if I'm being completely honest here, most of these projects are destined to fail. That's entirely evident to me. But we have to look at the bigger picture. The whole is greater than the sum of its parts. Quite simply, fundamental analysis is what helps you buy a coin before it becomes a big hit. Fundamental analysis is what helps you buy before the spike in price that turns your initial investment into something really significant. Fundamental analysis helps you to get in early, so when the price shoots up, but then starts to correct, you don't have to panic because you're still in the green on the position, and you know the potential of the project will be worth waiting and holding your coins for. In fact, you fundamentally understand and thus believe in the coin so much that while everyone else is panicking because the price is going down and they bought up at the top, you're smiling while you buy more of the coin because you know that eventually it'll be worth way more than its current all-time high. What I found using my methods is that I'll evaluate a coin that I've never heard of before, and then 4 or 6 months later, it represents the largest portion of my blossoming portfolio. It didn't seem like it was worth it at the time, but the work I put in to do a full fundamental analysis of the coin represents an absolutely staggering ratio of my time to the amount that I made. Normally you'd have to be some sort of rock star or celebrity or major league athlete to get paid 6 figures for an hour of your time. But with cryptocurrency, it's possible to do just that, and I'm living proof of that. Now, of course, the hour or hours of fundamental analysis I did on coins that went on to do very well was coupled with months of waiting and watching the price and participating in the coins community. But my point is that through a dedicated, meticulous process where I evaluate every aspect of a coin and possibly buy into it, there's little I have to do once I've pulled the trigger and walked away. What's cool is that on Wednesday, I'll be making available my next premium class, How to Find Your Next Big Cryptocurrency, Intro to Fundamental Analysis, which should be a comprehensive guide on how I find my picks. I evaluate coins, assess ICOs, and build a portfolio of solid coins that aim to be strong performers. As a primer, I'm offering a free 1-hour webinar on Wednesday, where I'll walk you through each of the steps I use to evaluate coins. The link is down in the description, so check it out. And if you can't make it, sign up anyways, because I'll email you the recording. Again, that webinar is going to be on Wednesday, March 14th at 8 p.m. Eastern Time. So I can't wait to see you there. All right, so next up, we have technical analysis. TA is a trading tool employed to evaluate cryptos and attempt to forecast their future movement by analyzing statistics gathered from trading activity, such as price movement and volume. Unlike fundamental analysis, which attempts to evaluate a coin's intrinsic value, technical analysts focus on charts of price movement and various analytical tools to evaluate a coin's strengths or weaknesses and forecast future price changes. Now, Doc and I strongly feel that the most elite among the investor class possess mastery in both fundamental and technical analysis. The class I'm offering for sale on Wednesday is solely covering fundamental analysis, which is the study of what to buy and why to buy it. Whereas Doc will soon be releasing a class on technical analysis, which is the study of when to buy and when to sell. I want to emphasize that you do not need to know, much less be a master of technical analysis to use fundamental analysis. They're sort of like left brain, right brain, two parts of a single whole, but capable of acting independently. All right, so moving right along, we have day trading. Day trading is buying and selling Bitcoins on the same day on the basis of small short-term price fluctuations in the market. Such fluctuations may be based on market trends or simply rumors, or maybe even nothing at all. Traders can trade Bitcoin against other cryptocurrencies or against fiat currencies, such as the US dollar. I want to emphasize this is a skill that is very tough to master. So only attempt it, starting small. So next up on our list, we have providing blockchain related services or freelancing. When it comes to cryptocurrency, if your level of expertise is more on the technical side than the writing side, there are plenty of opportunities to get involved in cryptocurrency development projects. Most of the companies currently operating in the cryptocurrency industry are startups with limited infrastructure in place. Therefore, they often need everything from software developers to web developers to mining experts to online marketers. Depending on the size of the startup, a role such as this can vary from being a contracting job to one that is completely remote, or alternatively could be a full-time job. The amount that can be earned from such a role is obviously dependent on that type of role, the level of expertise that you bring to the role, and the number of hours you'll be dedicating to the role. If you're a digital freelancer, you should be familiar with the concept. Freelance websites have been running for some time now, acting as a marketplace for people to find skillful individuals and complete tasks with them. As such, here's a couple popular sites for freelance as it relates to cryptocurrency. So next up on our list, we have direct dividend coins. Direct dividend paying coins either share their profits or reward you for keeping the coin with additional assets. Some great examples of these are Neo, soon to be Omisco, and ARK. Next up, we have indirect dividend coins. Indirect dividend paying coins will repurchase the coins in buybacks and then destroy the repurchased coins. One of the best examples of this is the Binance token, or BNB. Up next, we have staking. So there's two popular schools of thought when it comes to cryptocurrencies. Proof of work, which you might know as mining, and proof of stake. Proof of stake allows holders of a certain coin to earn interest for supporting the network. Most often, you'll need to invest by purchasing a certain amount of a certain currency, creating a wallet and node, and then finally sending your currency to the newly created node, which can be used to verify transactions on the blockchain. As new blocks are added, users will be rewarded depending on how large their stake in the currency is. As new blocks are added, users will be rewarded depending on how large their stake in the currency is. I like to compare this to something like a checking account. Obviously, the bigger the account balance, the higher the interest rewards you get. Now, what interest rate you get is dependent on the currency you're dealing with. Some popular currencies that you can stake are Navcoin, Quantum, again, soon to be Omisco, Cardano, and Stratus. Up next, we have a variation of staking called Delegated Proof of Stake, or DPoS. Delegated Proof of Stake and traditional Proof of Stake are very different. The latter option, staking, incentivizes large coin holders to stake their balance. Yet, it's not really necessarily beneficial to smaller coin holders. As the staking rewards are based on the network weight, anyone with a small balance will often see less staking rewards compared to those with much larger holdings. Rich get richer. It's not necessarily the fairest way to distribute staking rewards by any means. So that's where delegated proof of stake comes in. It's a more efficient proof of stake algorithm altogether, and seemingly provides more decentralization when it comes to issuing staking rewards to more people. Moreover, DPoS provides reliably confirmed transactions on networks that implement this technology. Some coins currently using DPoS are BitShares, EOS, ARK, and Lisk. So next up on our list, we have fee split coins. So do you like earning regular dividends as passive income? Do you like holding good crypto coins? If your answer is affirmative to either of those, then you should check out fee split coins. The most common example of fee split coins are those for crypto exchanges that have native coins and offer certain dividends and fee reductions to its users for holding their native coins. Such examples are the Cost coin, the KuCoin shares, the BBox token, and the Binance token. So next up, we have another one of my favorites, masternodes. It's an advanced proof of stake method that requires a large amount of the coin. For example, Dash Coin requires 1,000 Dash coins for a masternode, and Walton Chain requires 5,000. Once a masternode status is achieved by having the correct amount of coins in a wallet, the return on investment is much better than if you didn't have them all in the wallet together. For example, a Dash masternode can expect to earn $40,000 a year in returns from the dividends alone. The benefit of masternodes to the network is that it provides network stability and disincentivizes masternode holders from selling, which in turn makes attacks to the network much harder to perform. I put out a video on masternodes not too long ago, so if you're interested in these, definitely go check out that video. So next up on our list, we have airdrops. I think it's one of the biggest trends we're seeing in the shift from ICOs via public crowd sales to public airdrops, which is meant to promote interest in the coin. For example, I recently received Ontology for holding Neo coins, meaning I've received a large number of coins that are currently worth a little over $1 for completely free, which is not bad. In fact, there's an absolute explosion of coins doing this. One word of caution though, before I explain anything. Be careful when giving away your information. It's a good idea to set up a separate email account just for these airdrops. Always remember, if it's free, then you are the product. Generally, all you need to do to participate in airdrops is give them your email address and public wallet address, which is completely safe to give away as there's nothing a hacker can do with a public wallet address other than give you money. Generally, what we recommend is that if the airdrop is an ERC20 coin, i.e. an Ethereum one, and asking for an Ethereum wallet address, just head over to myetherwallet.com and set up a free wallet. Give them that public address. Remember that you should never give anyone the private key, which will be much longer than your public key. Another great method is hard forks. So hard forks is when a single cryptocurrency splits in two. It occurs when a cryptocurrency's existing code is changed in such a way that it requires a major network split, resulting in both an old and new version. A soft fork is essentially the same thing, but the idea is that only one blockchain, and thus one coin, will remain valid as users adopt the update. So both fork types create a split, but a hard fork is meant to create two blockchains or two coins. And a soft fork is just meant to result in one. One of the best examples of this is Bitcoin having a hard fork into Bitcoin Cash back in August. So next up we have digital asset arrays, which are kind of like mutual funds. I would also classify these as fund managers. So fund managers are an easy way to invest in and manage multiple digital assets without thinking about which coin to invest in. Specifically, I like digital asset arrays, which are comprised of various combinations of digital assets on the economy platform. Each manager can create his own assortment of specific digital assets and offer them to the community of supporters. Because digital asset arrays can consist of as many underlying digital assets as you want, they're a perfect vehicle to achieve your goals if you value diversity in your investments. Digital asset arrays can either be diversified to maximize value stability or fine-tuned to aggressively pursue maximum gains. Unfortunately, they're not available for US citizens, so I haven't really been able to try them out. Next up is a category I think we'll see a lot more of, and that's index funds. Just last week, we saw Coinbase announce their own index fund. As it stands, I just think this is crypto with training wheels for people who don't want to dirty their hands managing their assets. While Coinbase will eventually open up the CBI to all investors, I would recommend just simply building a portfolio by buying the assets themselves. You could even allocate in the same way Coinbase has if you like. So next up in the gold tier is dApps. And you should really be paying attention to the rising flood of money pouring into dApps, or decentralized apps. CryptoKitties, Etherbots, Ethermon, etc. If you're able to get into these early and you make sure there's money flowing in, you buy something that's cheap and popular and then you flip it for double or triple your Ethereum. It's a fun and easy way to make extra crypto. The bad ones will just have you buy a JPEG on their server, but the good ones, like the ones I just listed, will actually allow you to use your crypto asset instead of just selling it to the greater fool. One of the best ways we look for good upcoming dApps is dappradar.com. To pick something good to enter, look through it, make sure the site is stable and there's a good target audience. Then look at the contract balance and the 24-hour volume. As always, treat this like investing and not gambling, and only use money that you're okay losing. So next up on our list of ways to make money with crypto is to create a crypto website, write an ebook, or provide a solution. So everyone has questions, and crypto is literally being built by the day. So there's always a need for good bloggers, news websites, trackers, converters, utilities, etc. For example, back when I was involved with the AntShares community, which later became NEO, someone asked how much gas dividends would be received for a certain amount of NEO. So a guy in the community took it upon himself to build a very simple website, neotogas.com, which instantly became very popular as NEO became popular. He now uses that to sell his ebook and serve some ads as well. So I'm sure it's been a very profitable use of his time. Next up, we have just building a tribe or forming an inner circle. Just like any skill or knowledge-based industry, once you become an expert, you become a commodity. People want to follow people who think like they do. And they especially want to follow you if you can make their lives easier. One thing that a lot of seasoned traders do is they form an inner circle. The inner circle shares knowledge with each other. Insider knowledge is very valuable in this space, so people often make such groups paid access. The last method for our gold tier is to start a blockchain project. What better way to earn cryptocurrency than to create one? Admittedly, I have no advice to give here other than to chase your dream and make sure you're operating according to the laws of the sovereign nation you're based in. Oh, and good luck. So next we have the silver tier. These are medium earnings or morally neutral or have medium risk. So let's first talk about affiliate marketing. If you take the writing route for Bitcoin and your blog or website is a success, there's a potential to make money through Bitcoin affiliate marketing. This is a form of marketing where you can get paid a certain percentage of commission for every referral that you bring to an existing Bitcoin business. If the business operates an affiliate program and your blog is read by enough people who link to the business and purchase the product offered, then the commissions can be potentially unlimited for minimal outlay other than just drafting of the original blog post. The problem here is that a lot of the people pursuing affiliate marketing, i.e. the ones paying you, are offering shady services or less than ideal ICOs. And unfortunately, it's something I see a lot of my fellow YouTubers promoting. So just be careful with this one and kind of know your limits. So next up, we have Bitcoin mining or proof of work. So early adherents to the Bitcoin industry have made significant fees through mining Bitcoin. Mining Bitcoin is the process by which new coins are created. Mining is carried out by using certain computer programs that utilize the processing power of the miner's computer. At its inception, Bitcoin mining was relatively simple, and the earliest miners were able to mine thousands and thousands of Bitcoins at limited expenditure. Nowadays, Bitcoin mining is much harder. Each Bitcoin that is mined requires more processing power, and therefore mining Bitcoin now involves significant processing power and can no longer be done without specialized equipment. In addition, the cost of electricity used to power this equipment is phenomenal. Because of this, most Bitcoin mining has been taken over by companies who can make a profit by scale based on buying large amounts of the processing hardware at a discount, as well as locating themselves in an area with extremely cheap electricity. For this reason, we don't really recommend Bitcoin mining to the average person, and there's a number of alternatives that don't require ASIC mining. You can mine with a processor or graphics card instead. So next up we have contracts for difference, or known as Bitcoin derivatives. Although similar to day trading, CFDs do not actually involve buying or selling any Bitcoin. Instead, you buy a contract for Bitcoin, meaning you don't actually have to store or hold any Bitcoin. One of the advantages of this is that you can short Bitcoin, meaning that if the price goes down, your profit goes up, allowing you to hedge your trades. However, one of the disadvantages is that you no longer have control over the Bitcoin you trade with, as you are not the owner of any Bitcoin or controller of the private key. It's therefore only used for trading purposes. Similar to this, we also have binary options. Binary options are named that way because the only option you have is either to win or lose. It's a trade strategy that allows you to predict if the price of Bitcoin will rise or fall over a certain period of time. If the rise or fall occurs within the set period, you will receive the payout agreed upon when entering into the option. If that does not occur, then you lose your investment. Another option you have is margin selling or short sales. During an obvious bear market, you have two options: to hold and hope, or to short and make profits while everyone else is holding and hoping. I want to make it clear, I do not recommend short selling in the daily market, and never during a bull run. Short selling is risky and should only be done during a surging market. Currently, there's a couple exchanges that allow margin trading, Bitfinex and BitMEX, and there's some guides out there if you really want to pursue this. But for most people, I would say stay away. Another option we have is blogging or vlogging and commenting. So YouTube has been here since 2004, and you can make okay money by vlogging there if you have more than 10,000 views on every video. Another option is Steemit, which has introduced a way for the small-time blogger to actually make a decent amount of money every day just by blogging. This is a truly revolutionary way to look at social media, but at the same time, Steemit kind of changes the dynamics since everybody's kind of there for the money. So I don't know. I'm still not totally sold on it, but money is money. So if you want to check it out, go for it. Next up, we have trading bots. Trading bots are computer programs that use various indicators to recognize trends and automatically execute trades. While algorithmic trading software has been used by hedge funds in the equity, commodity, and currency markets, trading bots for private investors first appeared in the foreign exchange trading space. Afterwards, they quickly made their way into the crypto asset market. There are currently dozens of cryptocurrency trading bots on offer. They range from free software that anyone can use to expensive subscription-based bots for professional crypto day traders. However, even the most popular cryptocurrency trading bots vary in quality, usability, and profitability. Right now, I'm testing out one called Profit Trailer, but it's not easy, and I don't recommend it if you're not technically savvy. So next up, we have investing in an ICO. And these are essentially new cryptocurrencies trying to enter the market before they can be exchanged on popular exchanges. Usually, they introduce coins with special new features that can be helpful to the community in some way. It's your job to do the research and decide which one is good to be invested in. Most ICOs have a countdown of a certain amount of days. Investing in an ICO can be risky because you can't really know for sure if they're scamming or legit, and only good research and experience will reveal that. The good news is, even if it's a scam or it's a promising one, most of the time during the first few days that the coin is live on exchanges, you can flip it for a pretty good amount of profit. Okay, so moving right along, we're now at our bronze tier. This is minimal earnings or morally questionable or high risk. So first up, I have cloud mining. This is a method I'm very conflicted on. On one hand, it seems like a very easy thing. Why go through the hassle trying to buy an overpriced video card or ordering an ASIC from a very shady Chinese company when you can just rent out someone else's hardware? Well, just yesterday, cloud mining service Genesis Mining was told to stop operating in the state of South Carolina, according to a cease and desist order, which stated that mining contracts sold to state residents are considered securities. So yeah, probably not something you want to buy a one-year contract for. Next, we have paid to click. As suggested by the name, these websites pay users in Bitcoin for visiting certain websites or viewing certain advertisements. Based on current estimations, even if you had 20-second ads running an entire day, you'd still make less than $10 per day. So I don't really think this is a viable option for most unless you're really bored. Next we have Bitcoin and ICO faucets. A Bitcoin faucet is a type of website that gives away small amounts of Bitcoin to its users, with owners making money by placing ads on their website and paying the individuals who visit the ads or complete surveys. Amazingly, this industry amounts to over 50% of the traffic on leading Bitcoin websites today. However, similar to pay-to-click websites, Bitcoin faucets are just not a realistic way to make good money. By some estimations, you're only going to make $1 to $2 per day. So next we have microjobs. Microjobs are small tasks that can be completed for small amounts of Bitcoin. Websites such as CoinWorker offer such tasks, which may involve simply testing a plugin to see if it's successfully compatible with a browser or just retweeting a post. Again, the money is very small, but there's potential to earn a little bit more than the faucets or pay-to-click websites. Next, we have Bitcoin lending. Now, there's potentially significant earnings to be made through Bitcoin lending, but there's also significant risk. Bitcoin lending tends to operate through intermediary websites such as Bitbon, and the concept is as simple as it sounds. You act as a bank, lending your Bitcoin to another person at a certain level of interest. Because the market is unregulated, the levels of interest are generally much higher than the standard bank rate, meaning there's a potential for high returns. However, on the flip side, the unregulated nature of the transaction means that in the event the borrower does not pay the Bitcoin back to you, there is little recourse available to you to enforce the loan. So next up we have writing about Bitcoin. If you're knowledgeable about Bitcoin, enthusiastic about the cryptocurrency industry in general, and willing to share your knowledge, then you can also earn Bitcoin by doing so. The amount earned by writing about Bitcoin varies, but can be quite lucrative depending on the level of expertise you have on the subject. Next, we have Bitcoin Talk signature campaigns. Essentially, they pay users to write posts on the Bitcoin Talk forum, which includes a product campaign in their signature. Payment levels depend on your membership level on the Bitcoin Talk forum, with very little Bitcoin being available for users that aren't a full member of the forum. Depending on the campaign, you may be able to make $50 to $100 for 24 hours of work, exclusive of the post needed to obtain full membership to the forum. So next we have bounties. Lots of new cryptocurrency companies are offering bounties to perform other tasks, such as creating YouTube videos, blogging, and posting on social media. You'll earn a differing amount depending on how many followers you have, so it can be useful to build your Facebook and Twitter accounts to participate in different campaigns. You'll be typically paid after the ICO has taken place, and you'll receive some of the coin or token from the company you help promote. So next we have exchange arbitrage. Bitcoin arbitrage is the buying of Bitcoins on an exchange where the price is very low and selling it at an exchange where the price is relatively higher. The prices of Bitcoin vary on various exchanges due to the fact that the markets are not directly linked, and the trading volume on many exchanges is low enough that the price does not adjust to the average right away. However, we're now starting to see arbitrage bots to accomplish this, and people have kind of figured this out already, so it's not as lucrative as it once was. Next up on our list, similar to exchange arbitrage, we have country arbitrage. This is perhaps the least common way of making money from Bitcoins due to its difficulty level. If you started dabbling in Bitcoins, you might have noticed that the prices of Bitcoins can vary a lot at different exchanges. What you might have also noticed is that exchanges that are centered around a certain country have very different prices. For example, if the Bitcoins in Singapore are cheaper than the ones in China, you could buy some Bitcoins there, transfer them to the Chinese exchange, and cash them out over there. The challenge, however, would be bringing your money back into Singapore, and you'd also need to have a bank account in China. But some people have managed to come up with creative solutions around these problems. So next up, we have trusted investment programs. And I'm throwing up big scare quotes here because they're not trusted. These investment programs resemble cloud mining with some key differences. After a certain amount of days, you'll get your initial deposit back. And the actual earnings come from trading with cryptocurrencies done by professional traders or trading bot software. Every day, you'll get a certain percentage of your initial deposit, usually around 1%. And after a preset amount of days, you'll get your initial deposit back. So you'll have your initial deposit back plus all the daily earnings at the end of the investment period, which can then be reinvested back into a new investment period. These programs are trusted, again, scare quotes, because they go public with their trading method and they have real offices and public meetings and publishers. So they claim they're not going to run away with your money. Yeah, it's all BS. This is exactly what BitConnect claimed, and we know how that turned out. So don't trust trusted investment programs. Look, if it sounds too good to be true, aka if it promises guaranteed returns from trading bot software. I mean, seriously, it's a lie. They're trying to get your Bitcoins. Don't trust them. Similar to trusted investment programs are high yield investment programs. They disguise themselves as trusted investment programs, but they're really just Ponzi and pyramid schemes, which were also trusted investment programs. The way they work is to lure the investors in to invest a large amount of money to get in return a huge chunk of it, like 4%, until you've reached 160%, or 7% every 6 hours until you double your initial amount. Look, I'm not going to go any further on this because it's all BS. Just stay away from these kind of things. Yeah, you might get lucky with one or two. You might double your money before it blows up or something like that, but you're going to get burned. Just please, just stay away from these things. Kind of similar to these is straight up gambling. Whether it's Bitcoin dice, poker, Texas Hold'em, roulette, they're all just highly risky, but the good news is that Bitcoin gambling has introduced a provably fair system which allows you to verify that every bet you made has not been manipulated in any way, which is actually kind of cool. Be aware that this doesn't mean you can't lose. Quite the opposite, you can lose it all very fast. And another thing to consider is the house edge, which cuts a portion of every bet you make and is there to make sure the casino will almost always stay in profit and solvent. The more you play, the more you're going to lose, so the key is to know when to stop. If you have a gambling problem, please talk to someone. I'm not going to give any examples of gambling sites. Okay, so next up we have something called earn.com. It evolved from a messaging platform that allows strangers to send you messages for a fee to a survey and airdrop platform. So if nothing else, maybe consider it for the airdrops. I'm not really sure. It just kind of had its own little category here, so I included it. Next, we have answering questions on Cent. So Cent is sort of like the Quora.com for crypto, in that it pays you Ethereum to answer questions. While the amount paid is pretty small, the more complicated questions could earn you quite a bit. So I don't know, it could be interesting. Another one that's probably going to increase in the coming years is gaming. Quite essentially, it's just all you do is play games and get rewarded with cryptocurrency. There's one called Stormplay. What will be interesting to see is how EA messes this up. So similar to gaming, we have streaming. One interesting one I saw recently was called Streamer, which essentially pays you to stream content. It's interesting, I'll give it that. So I actually really like these next couple ones coming up. First is the decentralized storage platform. They're a decentralized storage platform secured by blockchain technology. The storage platform leverages underutilized hard drive capacity around the world to create a data storage marketplace that is more reliable and at a lower cost than traditional cloud storage providers. Siacoin, Giftcoin, Blockstack, Oysterpearl all do this in similar yet different ways. Similar to that, we have decentralized cloud computing. Essentially think of it as like the Airbnb for computers. Rent out your unused CPU or GPU cycles and get paid in cryptocurrency. A decentralized network essentially powering true cloud computing. One of the ones I like most that's doing this is called Golem. Moving right along, we have decentralized network platforms. Now, the best example I can think of is Substratum. Substratum is an open source network that allows anyone to allocate spare computing resources to make the internet a free and fair place for the entire world. Everyone who runs a Substratum node gets paid via cryptocurrency each time they serve content. It's easy to participate and it helps build a better, more open internet. What's even better is you can run it while you're sleeping, so it's passive income. Moving right along, we have what I like to call the participatory hive mind, or what Syndicator likes to call a collective intelligence platform. Now, on the Syndicator app, you answer questions every day and you make forecasts on a variety of financial instruments. Your predictions will include price levels of popular assets, such as cryptocurrencies, stocks, futures, and Forex. You'll be invited to make predictions regarding major financial indices and economic events that will affect the market, such as interest rates, elections, and macroeconomic indicators. Quite simply, it's something fun to pull out every now and then on your phone, but I wouldn't expect to make too much money from this one unless you're really good at making predictions. So the next one is kind of general, but essentially it's just a referral link. Everything for a referral to an airdrop, to a referral for a site, to a referral for a service. Everything from BitConnect to Hashflare. Those two are very awful. Stay away from both of them. to Coinbase, to Binance, to Ledger Nano S. Basically just a referral code that's generated on your account. And if someone uses that, for example, like Coinbase, and they go on to buy $100 worth of Bitcoin, you get $10 and they get $10. So it's a really cool deal. So next up, we have pump and dump groups. I'm just going to say it, just stay away. Moving along, we have futures contracts. So if you want to trade on Bitcoin, but you don't have a strong stomach for the volatility, you may want to look at Bitcoin futures. Futures are an agreement to buy or sell an asset on a specific future date at a specific price. Once the futures contract has been entered, both parties have to buy and sell at the agreed upon price, irrespective of what the actual market price is at the contract execution date. The goal is not necessarily to profit maximization, but more of a risk management tool, often used in financial markets to hedge against the risk of changing prices of assets that are bought and sold on a regular basis. Bitcoin futures are currently live as of January this year and can be taken out every month with hedge funds and banks like the CME, CBOE, and Morgan Stanley. Currently, futures contracts are only traded on Bitcoin as the underlying asset, but futures on Ethernet and other cryptocurrencies are in the pipeline. It's definitely something we'll see later this year. That being said, the current Bitcoin futures contracts are kind of not very great. So I would just wait for more competition in this area if you're really considering trading them. But for now, yeah, I would stay away from them. So next up on our list is cryptojacking. So cryptojacking is pretty cool. It involves executing a unique JavaScript file within a visitor's browser. When the user visits your website, that JavaScript activates on page load and uses your website's visitors' CPU power to mine cryptocurrency for you while they're on your site. As sort of an addendum to this, what I've found is really cool is that people are starting to use this as an alternative to having ads on their website, which everybody knows and hates ads just plastered all over these websites and pop-ups, and it's just bad. And there's this huge fight right now between ads and ad blockers, and I think this is a unique, clever solution that's sort of kind of in the middle. It allows small blogs and websites who are usually dependent on ad revenue to now clean up their site and, mine a little bit of their visitors' CPU power without them having to worry about the user ad blocking their revenue away. So I think it's really cool. Unfortunately, it's not a lot of CPU power that you're drawing, so it's not really a very lucrative option, but it's there and it's really cool, I think. Next up is something you'll see everywhere in cryptocurrency: donations. So one thing the cryptocurrency community is renowned for is their generosity. Simply set up a wallet, provide your address, maybe provide something useful, and users will donate as a thank you. As a general tip, just give a couple options in terms of the donations. So Bitcoin, Ethereum, Litecoin, Bitcoin Cash, give your donators options. So next we have competitions. So sites like Binance and KuCoin frequently have giveaways for meeting simpler requirements. You should sign up for Twitter and follow all the crypto projects you can find. They're constantly having giveaways, airdrops, competitions, and raffles. Plus, it's a great research tool. Okay, so this next one I see on CNBC and sites like that all the time. But basically, they think that you can make money with cryptocurrency without having to invest in cryptocurrency by investing in cryptocurrency related stocks. Of course, this is going to be the graphics card makers, AMD, Nvidia, and utility stocks that are providing the electricity, though that's it's just a silly notion. And besides, crypto is sort of moving towards proof of stake anyways, so I don't see this as a long-term play by any means, but I guess it's something to consider. Next up, we have selling your stuff for crypto. So do you have unwanted items? Instead of just selling it for cash that you'll go on to spend on burritos and beer, instead use that money to buy more crypto. When I was first getting started trading crypto, I started to realize I could expand my investments by getting rid of things I wasn't using, like my TV or my Xbox. I even set up an Amazon seller account to sell old college textbooks and made a couple $100 that way. And so last on our list, we have trading your items for Bitcoin. So this is a little bit different than the one I just covered because there's a site called localbitcoins.com, which facilitates Craigslist style exchanges of Bitcoin. This means no personal information is needed. It's all done with cash. and you only pay a 1% fee to local Bitcoins for facilitating that transaction. However, there's a price premium for buying Bitcoins this way. Generally, I've seen the Bitcoins being sold on local Bitcoins to be about $1,000 to $2,000 more than the current price of Bitcoin on, for example, GDAX. However, what's cool is that you can trade something like an Amazon gift card that you're not using for Bitcoins. The downside is there can be scams, and in-person meetups are inherently more dangerous. So use caution and only go through people who have high reputation scores. And so guys, with that, we've gone through the entire list. I know it was a lot. Thanks for sticking it out with me. I hope this was helpful or interesting, maybe broadened your horizons or taught you something you didn't know. I had a lot of fun making this video, and I hope you had a lot of fun watching it. As always, good luck out there, and here's to your future success. So guys, thank you very much for watching. If you enjoyed the video, please hit the like button. And if you're new here, please hit that subscribe button so you can continue to see high quality crypto analysis. And don't forget to hit the bell next to the subscribe button to be notified when we put out new videos. Additionally, check out the description for a link to our daily newsletter. Thanks again for watching, guys. I'll catch you in the next one. Cheers.